Hello, a very warm welcome. You're watching Inside India. I'm Manisha Tank, and here are your headlines this hour. Indian Prime Minister Narendra Modi and the UK Prime Minister Keir Starmer are meeting in Mumbai. Both leaders hailing their recent trade deal, calling it transformative, saying it's already begun to bear fruit. Earnings from Tata Consultancy Services beat on the top line, the company also flagging better growth in the second half, boding well for the country's IT sector that's currently dealing with cautious client spending and uncertainty, especially in its top North American market. And the IPO frenzy continues. WeWork India set to debut on the stock market today after a tepid response to its offering, while the IPO for LG Electronics India unit closed to become the most subscribed billion-dollar maiden share sale in nearly 20 years. Oh, very good morning from our Singapore studios. And with that, let's kick off by taking a look at how Asian markets are faring so far this session. And actually, most of the major indexes are trading lower. You can see a sea of red there. The Kospi moving higher by more than 0.3%. It has reopened after a long holiday. Investors there very much getting the chance to play catch up with all the moves in the big tech companies and the chip stocks this week. So yes, very much a different picture to the rest of the indexes. And look at the Nikkei pulling back by 1%. This is after spending most of the week in positive territory. Overall, we saw a lower close on Wall Street, that possibly contributing to sentiment in this part of the world and meaning that some of that profit taking is happening. But there is lots going on elsewhere, particularly in India. Indian Prime Minister Narendra Modi has talked to US President Trump on the phone. He's congratulated the US leader for progress on the Gaza peace plan. In a post on X, Prime Minister Modi said the two leaders agreed to stay in close touch. The call comes as India and the United States continue discussions on a potential free trade agreement, with New Delhi still facing 50% tariffs on exports to Washington. And the US blames those high tariffs for India's continued purchases of Russian oil. Treasury Secretary Scott Bessent now saying that New Delhi will soon begin reducing those imports. He added that in the coming weeks and months, India's energy purchases are expected to shift in favor of US oil. In the meantime, Prime Ministers Modi and British Prime Minister Keir Starmer are hailing a new UK-India trade deal as a game changer. During his visit to Mumbai, Starmer announced £1.3 billion or $1.75 billion worth of fresh Indian investment into Great Britain. It's expected to create thousands of jobs. The wide-ranging pact cuts tariffs and boosts access across key sectors from tech and education to defence and AI. Starmer touted the two countries' tech prowess, saying it could be a major driver for business growth. Have a listen.
What we're doing together in tech is a great example. The UK is one of only 3 countries in the world with $1 trillion tech sector. India is poised to be the 4th. We're both top 4 AI powers, and we're taking this opportunity to go further. We're deepening the UK-India Technology Security Initiative to boost opportunities for great British companies and deliver dozens of new investments into the United Kingdom.
British Prime Minister Keir Starmer, who's leading that huge trade delegation, defence deals worth over $700 million were also unveiled as both sides pledged to deepen cooperation. Despite some differences on global issues, such as the Russia and Ukraine war, the UK signed a $468 million deal to supply India with British-made lightweight missiles. Meanwhile, Indian Prime Minister Narendra Modi said bilateral trade could be doubled well before the 2030 target.
Today, our bilateral trade is almost $56 billion. By 2030, we expect doubling this target, and I have faith that this target will be achieved before the deadline. The development of infrastructure is a matter of great importance for us. We are investing in next-generation physical infrastructure. We are also rapidly progressing towards the target of 500 gigawatts of renewable energy by 2030. I am pleased to announce that we are opening up the nuclear power sector to the private sector And all this has created opportunities to take India-UK cooperation to new heights. I invite you to join India on this development journey.
India's Prime Minister Modi there. Let's see how markets are digesting all of this. Indian shares will come online in about 40 minutes, but we can look at GIFT Nifty futures as a bit of an indication. And we know that the Nifty finished around 25,200, so we're pointing to just a slightly higher open, perhaps. But the markets and investors have more than just geopolitics or those talks or free trade agreements to digest. Lots and lots of earnings are on the slate, and we're going to be talking about that up ahead in the programme. We'll keep an eye on those markets for you. We're also watching a big listing today. Shares of WeWork debut on the Indian stock exchanges in the next hour. The $338 million IPO managed to get full subscriptions, but saw a bit of a tepid demand from investors. In the grey markets, shares were trading flat at zero premium, signalling a muted debut ahead. Meanwhile, it was a different story for LG Electronics. It's become India's most subscribed billion-dollar issue in nearly 2 decades. Investors pouring nearly $50 billion in bids, oversubscribing the offer by more than 54 times. That makes it the biggest rush for a large Indian IPO since Reliance Power back in 2008. That was 17 years ago. Shares are set to hit the market on October 14th. And amid this busy IPO season, earnings, like I said, they're kicking off as well. Tata Consultancy Services starting the parade, beating revenue estimates in the September quarter, with sales rising 2.4% to $7.4 billion. Those gains were powered by its banking and financial services arm. Profit did miss forecasts due to severance costs tied to a major workforce cut. Order bookings hit $10 billion, the highest in a year. TCS also announcing a new AI-focused business, including plans for a $5 billion 1 gigawatt data center. The company sees stronger growth ahead as project delays ease and client demand improves. Well, Bino Patiparampil is the head of research at Elara Capital. He joins me now to digest all of this. Bino, first of all, let's talk about TCS. What did you make of the results? And could those results lend any further upside to the broader market?
Hi, good morning. So starting with TCS, the numbers were better than expectations that were already subdued in the market. As you know, we have seen a long period of earnings cuts in the Indian IT sector because of weak demand, mainly coming from the US. That has not significantly changed. Of course, this quarter numbers came in a little better than the very subdued expectations. And for the second half, the management has guided to a better growth, but that does not mean the growth is going back to what originally analysts expect these companies to deliver in the 6-7% range. So we need to see a little further pickup coming our way before we get so confident on the IT sector. As of now, we continue to be a little cautious in our approach to the IT growth expectations in India.
Bino noted on the caution. I'm wondering, is some of that caution coming from the external headwinds, where everybody's wondering how hard will uncertainty in North America cloud the outlook for the IT sector?
One aspect of it is the uncertainty around the trade war that the US has started off. That certainly has contributed to it. But in addition to that, a major flux in the tech world coming from AI adoption and AI products has also impacted the demand for IT services in the near term. Of course, as AI becomes more present across companies, there will be more demand for AI-related IT services, which will benefit the Indian IT players. But as of today, the flux created by the AI product adoption could also be a contributing factor to this slowdown.
Okay, let's get back to the markets. We have a slew of results tabled, everything from consumer goods to telecoms. Can you just run us through some of the big names that we need to be watching out for and what we can expect from them?
Sure. Quarter two, we expect to be a turning point in the Indian markets. Last few quarters, we have seen very tepid growth in the Indian company for the Indian corporates. Last 6 quarters, we have seen only single-digit growth year over year for our coverage universe, which includes almost 300 companies in the Indian listed space. But this quarter, after 6 quarters, we are going to see a double-digit growth, mainly driven by sectors like cement, metals, consumer discretionary, and automobiles, and contributed also by the oil and gas sector. So quite a few sectors are driving the growth this quarter. It will be a bit dragged down by some other sectors like financials, IT, and pharma. But overall, we are seeing a revival of growth after 6 quarters, which we look at as a positive signal. Um, for the last 6 quarters, we have also seen that the forward earnings estimates have been revised downwards after the quarterly results. We believe this will be the last quarter where that could happen, and we may go into an earnings upgrade cycle starting next quarter. So overall, we believe that this quarter numbers will be a turning point for the Indian corporates.
Interesting, Bino. So you mentioned financials, pharma, IT as potentially having a bit of pressure. I want to pick up, though, on telecoms. Telecoms is an area that's been struggling, especially Vodafone Idea, with debt issues, for example. Why do you think it will do better this earnings season? And you know, is that a mixed picture? Is that a potential downside pressure?
Telecom is one of the sectors where we have been seeing a steady improvement in pricing. The average revenue per user has been going up over the last few quarters. We believe that will further go up in the coming couple of quarters. We have seen significant consumption boost coming from government policies, the cut in GST, cut in income tax rates, upcoming pay commission revision for the government employees. All this is together putting a lot of money into the pockets of people. A lot of that will go into the consumer discretionary spending, where we also classify telecom spends. The other areas it could benefit are automobiles, consumer white goods, travel industry, etc. But telecom is also a very key component of the industry, which will benefit from this extra money in the pocket of people. So while this quarter will see continued revenue per user growth, going ahead, we believe that can accelerate. So overall, we have a very positive view on the telecom sector. Vodafone Idea in particular has its own set of problems, but I believe that the government and the industry will work together and come forward with a solution which is acceptable to all the stakeholders.
Okay, let's talk a little bit more. You did mention taxation there. Let's talk a little bit more about GST cuts. Do you think that that's going to help boost some certain sectors? And why do you still see a weak consumer sector earnings despite all of that?
The GST cut is going to help the consumption industry significantly. We have already done some channel checks on the ground in various parts of India, rural, urban, semi-urban, etc. The signals that we are getting is that we are going to see a major boost in consumption over the next 3 months, which we have already started seeing on the ground. As you know, India is going through a festive season, which has started and possibly goes on for another 2 to 3 weeks. The initial signs of pickup in consumption is already visible. If you look at the sales in automobiles, car sales, two-wheeler sales have picked up in a significant way in the last couple of weeks after the GST cuts came into force, which incidentally coincided with the festive season. We are also seeing that in other areas which are consumer discretionary, like travel and tourism, hotel demand, etc. On the other side, this has not really benefited consumer staples. The FMCG companies do not seem to be benefiting significantly from that. The extra money that's in the in the pocket of the consumers seem to be going towards higher ticket items and discretionary items. So we prefer to play through consumer discretionary rather than consumer staples. Having said that, there are two other areas, two other industries which are also benefiting, which is value retail and quick service restaurants. But there is a lot of local competition which is eating into the market share of the listed players in that space. So we would like to stick to automobiles, travel and tourism, and consumer white goods as the key sectors which will benefit from this huge consumption drive that is driven by the government policies.
Interesting stuff. Bino, thank you very much for that. I have one last question, if you could just very briefly answer this one. This is around domestic demand versus the external headwinds. To what extent do you think external headwinds are having an impact right now on market sentiment?
The external issues, which is mainly the tariff war and the trade tariffs that the US has put on India, is impacting select sectors, mainly textiles, gems and jewelry, etc. From a listed market perspective, it is mostly textiles, as not a lot of gems and jewelry companies are listed. But apart from that, across the economy, we don't see any significant impact as of now. We have seen that the rupee has depreciated a bit against the dollar on the back of this, which has probably helped other export businesses. Overall, the economy has fully absorbed this. And further going ahead in the next quarter or so, we do expect some thawing of the trade war. We believe that the tariff imposed by the US will come down from the current 50%, which is a bit too high and punitive, to something what is normal in the 15 to 20% range, which should normalize the trade happening in those affected sectors. You should also keep in mind that India is diversifying significantly its export outlook. We just talked about the India-UK trade deal, and India-EU trade deal is also coming up. We are also reaching out to other parts of the world, including Latin America, etc. So India's export basket is getting diversified geographically, and that should also help ease the trade-related concerns.
Okay, thank you so much for that, and we'll have more on trade later in the show. Bino Patiparampil from Elara Capital, our sincere thanks. As we tail into a break, we want to bring you an update on a strong earthquake in the Philippines. President Ferdinand Marcos Jr. has ordered evacuations in coastal areas after a magnitude 7.5 tremor in the country's southern Mindanao region. He says authorities are currently assessing the situation and they are preparing search and rescue efforts to be deployed as soon as it is safe to do so. The U.S. Tsunami Warning System has issued a tsunami threat, saying hazardous tsunami waves were possible for coasts that are within 186 miles of the earthquake's epicenter. We're going to continue to track the developments as they happen. In the meantime, Inside India is off for a quick break. We'll be right back. Hello again, welcome back. India is taking a big leap in AI-powered commerce. The National Payments Corporation of India and Razorpay have teamed up with OpenAI to push AI-driven payments on ChatGPT using India's own UPI network. Currently in pilot mode, the service lets users shop directly through ChatGPT, with payments handled by AI agents with minimal human input. Axis Bank, Airtel Payments Bank, and Big Basket are part of the rollout using UPI's new Reserve Pay feature. The move positions India at the forefront of agentic AI payments as the likes of Google and Perplexity roll out similar tools worldwide. Just when I didn't need another reason to shop. And those fintech firms were also present at the Global Fintech Festival, which just wrapped up in Mumbai. Artificial intelligence and finance was the key theme this year, with conversations focused on how AI is being adopted across industries. We caught up with the CEO of Reliance General Insurance. In a wide-ranging interview, he reflected on how AI is transforming the insurance sector, from risk assessment to claims processing and much more.
The National Health Digital Mission is going to generate 1.5 billion records in the next 5 years. Just imagine if these records, of course with the help of consent and all these mechanisms which are getting put, if these records really flow into an insurance company, automatically so much of richness will come in the offerings, the products, the comfort. Automatically a lot of the things will get pre-approved. Your ability to underwrite them goes up so much more. So in my view, use of AI is multifarious. Look at the claim side. Look, if we are able to eliminate inconsistencies, not just frauds. Fraud is on one extreme, but inconsistencies, lack of full information and all. Maybe we can move towards a claims guarantee kind of an environment. Why do we have to look at claims as something which happens over a few hours or days or like that? It's just like pre-approved. So my way of looking at this thing is AI is an intelligence layer which is now coming, which is now a step above automation. It also helps intelligent people with basic information in a far more accurate way than what individuals could also have. Like I'm experienced for 25 years. I've seen a lot of things, but a lot of the things were at different points in time. In today's context, the most accurate information resides in an online search. AI models, AI engines can embed into virtually everything which require database decisioning. And database decisioning is our future.
That was Rakesh Jain speaking to our team in Mumbai. Well, GST on health insurance premiums in India has now been slashed to zero from 18% earlier. So we also asked him about the impact of that move and how it could help bring more people under the umbrella of insurance.
Why is GST important? Because India needs first-time buyers of insurance. We are a young country. We are also a country which is economically moving upwards. And we really see that while people are growing in various ways, protection is one thing which stabilizes your entire, livelihood, your existence, your quality of life in particular. And I think the most important burden we carry is to make people aware about what should be the rightful protection which they need. So this is where I feel that the GST, which reduces the price for the most important thing, say health. Health is what we generally live for, right? Making that affordable, making that accessible, is something which will bring in a lot of customers to come under the fold of insurance. And eventually these customers will end up buying beyond health also because of the awareness which gets created. So this is a landmark thing to happen. I don't recall in my 25 years to have come across any initiative which has had such a deeper impact from the regulatory side. Most of the initiatives have been towards an idea, but never been towards affordability or convenience. And I think this is a great move. I feel a lot of the news which I read in the papers, of course, this came from 22nd, so we really have to see some of the data emerge over the next few weeks. But my sense is, at least from the new car sales or the bookings which are coming in, also from the durable sales, the Navaratri sales, today morning also, some data came in. Most of the things looks to be upwards of 20-30% in the good segment. And the euphoria is, of course, 100%. So we just need to see the impact of this, and I think this will bring in a lot of benefits to the insurance sector.
Interesting stuff. Well, a recent Lancet study said 70% of India's population doesn't yet have health insurance. So we asked the Reliance General Insurance CEO, what's behind this underpenetration of insurance and what needs to change?
Most of the insurance companies, all of us, have grown by selling a product to a customer. It is time to sell more than one product to the same customer. Because the amount of duplicity we do, the amount of, differentiation we create in products, the amount of cost we add by doing the same thing again and again, frankly, doesn't bode well to anybody. Insurance companies have high UM issues. Customer feels he does not get the desired relationship benefits. The distributor thinks his commissions no longer grow. Fundamentally speaking, we need to aggregate and bring these things together. The more you know a customer better, I am also presuming we will understand the risks in a more holistic way. So policy density per customer needs to significantly move up. And that is another way to say it is not about under penetration, it's also about under insurance. Even if you have a 5 lakh or a 10 lakh rupee health cover today, you are significantly underinsured. While on some parameters we'll count and say, he is covered. But how much is he covered? Is he really taking care of the healthcare expenses which are galloping every day? That's not true. Most of us know when you land up in a hospital in ICU, I came across a case, now it's 1 lakh a day without even surgery. You will end up spending in the best of the hospitals. How many people think like that? So structurally, it's a very different world which we are moving in. Technology is an enabler, but the objective is partnership with empathy, because at the end of the day, your business model sustains on trust.
CEO of Reliance General Insurance, Rakesh Jain. Coming up here on Inside India, the city of Mumbai was dotted with posters and hoardings of British Prime Minister Keir Starmer this week. Starmer's visit was all about trade, investment, jobs and Bollywood. We'll discuss more with Harsh Pant of the Observer Research Foundation. Stay with us. Hello, good to have you back with us. We are counting down to the market open in India. Let's have a look at how things are shaping up. And they're not shaping up too much, actually, pretty much looking like a flat open. But we did have a higher close for the Nifty in the previous session. It closed above that 25,000 level yet again, buoyed by IT and base metal prices. We're also right ahead of holiday season, as we heard from our earlier guest, Bino. That actually might put some spark into a number of particularly consumer goods stocks. But we did have a bit of a drag from Wall Street overnight, where we saw the major indexes fall. And it's a big week coming up for earnings. So maybe investors are just saving their energy for now. Okay, as we've been mentioning in the show, we've been talking about British Prime Minister Keir Starmer, who has now wrapped up his 2-day visit to India, where he aimed to promote that landmark trade deal that was signed back in July. He finished his session at the Global FinTech Festival in Mumbai. You can see him speaking there. And he pitched the UK's fintech sector to Indian investors.
We are both world leaders in fintech. We have the second and third largest fintech sectors in the world. Our trade in services has doubled over the last 4 years alone. And now our trade agreement provides a launch pad to go even further. We want the UK to be your #1 partner of choice for finance and fintech.
British Prime Minister Keir Starmer there. Meanwhile, Prime Minister Narendra Modi spoke about his country's skills and talent in the fintech sector and how the India-UK partnership can serve as a model for global trade.
India and the UK have shown the world the route for a win-win partnership on global trade. Our cooperation in this area of AI and fintech strengthens this. The combination of the UK's research and global finance empires and India's skill and talent can open new doors of opportunities for the entire world.
Okay, well, Harsh Pant is Vice President of Studies and Foreign Policy at Observer Research Foundation. He joins me now to talk a little bit more about this. Harsh, very, very good to see you. Interesting there, what Prime Minister Narendra Modi was saying. It reminds me of some old R&B lyrics that say, "This is how we do it." It's very much an example being trying to be set here. Do you get that sense?
I do. I think, after a long time, we are seeing India and Britain coming to terms with the changing realities around them, and that they need to reconfigure their relationship for the needs of this century. Basically, I think for a long time the India-UK relationship had been dominated by legacy issues, history, diaspora, which are all important. But I think now, given the inherent pragmatism that is often needed to meet the challenges that are coming thick and fast, I think this is a good start, and the recognitions since the last few years that trade, investment, fintech, technology, innovation, those are the sectors where energy needs to be invested. And I think the two sides are making that case to their own constituencies. And I think this is the beginning, how it is supported by the infrastructure, how it is perceived by the local stakeholders, that will determine its success. But I do think that the top leadership is now investing in what is needed to be invested in making this relationship more robust and more vibrant.
Yes, very much. And, it's really interesting in some of the pictures we were running there. What's really interesting is also the body language. It's very close. There's a lot of sort of what seems to be almost reassurance as well. I think what's also reassuring, perhaps, is that this was the biggest UK trade delegation to India. And one wonders if this is very much, bolstering what you were saying just there. It's very much a sense of a sign of the times. Do you have much insight on what that delegation looked like? Because, obviously the best of British business needed to be represented.
Yes, I think, this huge delegation that Prime Minister Starmer took to India, I think was intended to signify two things, because it had the business component and it had the cultural component, and both the industries, I think, in their own ways both sectors contribute to this relationship, and I think the symbolism was inherent that UK is coming in a big way and looking at India as a major partner, that we are going all out to woo India, that this is a relationship that is the relationship of the future, that important CEOs of important British companies are making a beeline for India as a reflection that the priorities in India-UK relationship are being reset. And of course you had the people-to-people dimension and the cultural dimension in the delegation as well. where the idea was to project this as a continuation of that long historical relationship that the two sides have possessed, driven by the people-to-people engagement. And I think that symbolism was not lost in India because, as we very well know, this is a moment when India-US relationship, for example, is going through a rough patch. And to have Britain, come and as Prime Minister Starmer said in India, that the Indian economy seems to be doing very well, I think it was also a retort to what the US president had said a while back, that it's a dead economy. In some ways, projecting UK as a partner that could be relied upon, that could be, that is the partner of the future, and India reciprocating and welcoming not only the Prime Minister and the delegation, but also this larger reorientation in which both sides are willing to bet on each other and compromise where needed, because as you know, the CETA, the Comprehensive Economic and Trade Agreement that was signed, required concessions from both sides, and those were made. So that's why I think the India-UK FTA is such a big deal. And therefore, when Prime Minister Starmer's visit was talking about early implementation, there is a sense that this needs to be implemented, ratified fast, so that the benefits could be leveraged.
Harsh, I want to get back to some of the details of what happens next in just a moment, but I want to understand a bit of context here. So something else really interesting happened in the last 24 hours, and that is that Prime Minister Narendra Modi had a phone call with US President Donald Trump. Now, you could say that was congratulatory about that deal over Gaza, but it seems that trade must have come up again. We've also had comments from Treasury Secretary Scott Bessent about where trade is going to be and about India's consumption of Russian oil. It's all come up in the week where British Prime Minister Keir Starmer is in India. Do you think that that is an accident of history, or is it connected?
No, I think, in diplomacy, symbolism matters. So I'm sure there are elements of symbolism. There's optics here, which is important. But I think the message was, of course, related to Prime Minister Modi's message to President Trump was related to the Gaza deal. And I think this was in his own way. There is an attempt by both sides to reach out to each other. And a few weeks back, President Trump had also reached out to Prime Minister Modi during, calling him during his birthday celebrations. And therefore, I think both sides are looking at, that is India and the US, are looking at bringing the temperature down, ensuring that, a trade deal that everyone recognizes as critical for this relationship concludes at the earliest. And therefore, you would have seen the statement that, look, negotiations still continue, whatever certain officials from the US may be saying publicly. India has not come back, and India has not in a way, top leadership in India has been very pragmatic, very measured in their response. But I think Prime Minister Starmer's visit also underscores a reality that, look, India, with or without America, will continue to grow. So this idea that what President Trump in one of his statements said, oh, it's a dead economy, there's nothing much to do with India. I think serious people in the US also know that that's quite incorrect, that Indian economy will continue to grow, and India's engagement with the West will continue to grow, given the strategic realities, the structural realities that both West and India face in the Indo-Pacific and beyond. So I don't think that convergence has gone anywhere. But how do you navigate the turbulence that Mr. Trump has unleashed? Perhaps it gets reflected in how leaders like Prime Minister Starmer and Prime Minister Modi are handling at this point, because that's where partnerships among like-minded countries become important. And India and the UK are showing that if they can get together, if they can make a statement of intent as to where they intend to go in their bilateral ties, that will have a ripple effect on other relationships. And I think perhaps that's what we have witnessed this week.
Absolutely. However, I also want to raise something else in this. Now, you alluded earlier to all of the benefits on both sides of this coin. But of course, back home, British Prime Minister Keir Starmer is facing quite a lot of blowback over some major issues. Obviously, migration is one of them, and that is one of the reasons he hasn't been particularly forthcoming, perhaps, on the visa issue vis-à-vis India. But also, he has talked about national ID cards. Now, if there's one country we know that has rolled out a national ID system, which has also then led to a boom in fintech, it is India. I think I'm certainly very curious about the fact that he has been there for the fintech festival, where a lot of the people with the knowledge and the experience of how that integrated ID system works and what it can lead to, he would have spoken to those people. Do you think that there is some connection there?
I think India has shown in the last few years that there are certain sectors, certain areas where it has really taken a leap, and other countries which we would consider technologically more sophisticated are catching up and learning from Indian experiences. And I think this is one area where if you think of how national ID cards have been absorbed into the system and how the mechanics of this has been put in place is a real opportunity for India to showcase that to the rest of the world. And I do think that the British Prime Minister and his team would have interacted with as to what has happened with people who are part of this process, because they're clearly learnings which can be incorporated. Of course, the contexts are different, and how the systems absorb them will be quite different. But I do think that India has shown that even a relatively poor country, a country that is still developing, a country where infrastructure in many ways is still evolving, can make a leap of faith and can deliver on certain outcomes that one would have not thought possible a few years back. And that's why there is a spring in the steps of the Indian startups, Indian tech sector, because there are clearly economies of scale that can be harnessed in India, which I think other nations certainly would be looking at carefully, and Britain in particular. I think what we have seen, for example, the kind of focus on tech and innovation in India-UK partnership is reflective of both sides, core talents, and I do think that what Britain brings to the table with its long-standing expertise and what India brings to the table in terms of the quick operationalization of many of these ideas is really an important match. And that needs to be leveraged if this partnership in technology, innovation, emerging tech in certain critical sectors has to reach its full potential. So I'm sure that is something that would have happened. And just very briefly on this issue of immigration as well, I think in India there is a recognition that immigration is a sensitive issue, and it will have to be tackled in a manner that perhaps also is reflective and sensitive to the ground realities. And therefore, you would have noticed that India's case has always been in recent years that, look, we are against illegal immigration. We want to support countries that are fighting this, and we will be helpful. But where there is an issue of legal immigration, where there is an issue of professional mobility, student mobility, I think there India has acknowledged that needs to be worked through the two systems. And I think what Prime Minister Starmer did was, and it was something interesting, saying that, look, we will have more British universities come to India as Indian higher education market has opened up, rather than, in some ways, bringing Indian students to the UK, which is also another way of saying that, look, we have to manage the domestic dissonance on this in a manner that perhaps also benefits British industry, education industry. And I think this is one way of going about it. So I think British education sector has been the first mover when it comes to setting up shop in India. And I think we are going to see more of that. That will also alleviate some concerns on the immigration front.
Yeah, and actually all of this coming in a week where we've seen really big names, British companies like Revolut, for example, announcing their intention to roll out business in India, and that's been quite significant in that sector at least. Just finally, I wonder, in terms of what we've heard from Prime Minister Narendra Modi and the sort of Indian side of things. Is this India also saying, we are very much ready for business, we want to be a global player? All of this coming after years and years of regulations that have made it tough for foreign companies to do business and navigate the Indian market.
I think so. I think every crisis comes with its own set of opportunities. And I think in this particular case, the crisis that in some ways what Mr. Trump has unleashed, the uncertainty that he has unleashed, has also allowed leaders like Prime Minister Modi to rethink their approach to economy, perhaps. And I think, he has gradually laid the foundation over the last decade of how India can engage with the world. But perhaps this is the moment where he seems to be recognizing the challenge that India faces if India does not embrace the world in the economic sector much more ambitiously. And therefore, this focus on FTAs, therefore this focus on tax reforms, the focus on how India can perhaps become a voice of the global south when it comes to when it comes to business practices, when it comes to broader engagement. And I do think that the uncertainty that India faces also allows it to make a case to other countries in similar positions, like, for example, Europe and the UK, which are also struggling with this question of a strategic autonomy. How do you build a strategic autonomy at a time when the most important alliance partner is perhaps preoccupied with other things, and India facing a challenge of building its domestic capacity? And therefore, when India and the UK are talking to each other today, they are talking also of co-production, co-development, including in defense. A few deals came through during this visit as well. So across sectors, what we are witnessing is a certain acknowledgement by India that it needs serious capacity building, and it needs it here and now, not in the distant future. So I think India is willing to make certain statements of intent, and that is what perhaps might be reflective of how the world is changing around India, and how India perhaps wants to leverage those changes, howsoever negative they might seem at the moment.
We have to leave it there. Harsh Pant from Observer Research Foundation, thank you for wrapping all of that up, all of that trade action between the UK and India. Now, in the meantime, denim apparel maker Levi Strauss is counting on India to be one of the growth drivers for the company down the road. Here's a sneak peek of Managing Asia's Christine Tan's interview with Michelle Gass, Levi's first female CEO in its 170-year history. Have a listen.
Well, one market I would say that just has so much upside from where we sit today is India. And I would say a couple things. Number one, there we've already made a lot of inroads as being known for more of a denim lifestyle, head to toe. The team has done a great job. But when I think about the opportunity, the population, how youthful it is, there's a ton of upside in India. So that probably, in terms of sheer growth, will be one of our fastest growing, biggest growth markets as we point to 10 billion. But I would say across Asia, there's a lot of opportunity. I mean, Japan has been one of our fastest growing markets the last couple of years, and we're expecting that to continue with all the great product that's coming out. And even China, which, I would say to date, we have not been a great success there, but we're not giving up. And
what are you doing in China?
Well, we're doing a reset, is what I would say. We, for a variety of reasons, a lot of which I'd say we own, we just have not executed to our potential. So
what's holding you back from doing more in China right now?
I don't think anything. I think we have to get the right leadership team, and we've brought in some great new leaders, and we have more coming that have deep retail capability, better real estate. And I think in China, we have been trying to figure out what that right balance is between core Levi's, what's consistent around the globe versus what is nuanced and unique for China. And we're figuring that out. But I have confidence we're going to get there, because that's a really important market for us long term.
When you look at Asia, do you have a target? How much do you want Asia to contribute to your ambitious $10 billion revenue goal?
I will say that it will be significant. But we expect outsized growth from Asia relative to our more mature markets. Still expect growth in the US, still expect some growth in Europe, but my expectation is that Asia will outpace that.
That's Christine Tan speaking to the CEO of Levi Strauss, the only CEO who can wear denim in a professional capacity. You can catch Managing Asia at the Times on your screen. Okay, coming up, Indian markets. They've joined the trading day. Let's have a look. We will have a look at some of the movers for you. That's happening after a short break. We're back in 2. Welcome back. Let's take a look at how Indian markets are faring. They are open for business, and the Nifty moving up by about 0.2%, pretty much flat on the currencies, 88.77 against the US dollar for the Indian rupee. And it's been an interesting 24 hours for TCS. A quick check on how TCS shares are responding to the earnings report card that came out late yesterday. It is, of course, one of the largest IT services companies of India, and it beat revenue estimates. So the shares pulling back almost 0.75% or more than 0.75%, and moving even further in that direction as we speak. So 3,031 rupees a share. Profits were dented at TCS by restructuring costs. The company has also flagged better growth in the second half, boding well for the country's IT sector. And that's currently dealing with cautious client spending and uncertainty, especially in its top North American market. Elsewhere, Norway's sovereign wealth fund, Norfund, has invested $20 million in SAEL Industries, taking its total stake to $130 million. This is ahead of the renewables energy firm's planned IPO. The funding will support SAEL's clean energy products across Punjab, Rajasthan and Haryana. Meanwhile, Norway's wealth fund also took part in LG Electronics India's $1.3 billion IPO, joining BlackRock, Singapore's GIC and Abu Dhabi's Investment Authority as anchor investors. Bharat Petroleum is set to invest nearly $11 billion to build a new refinery in the southern state of Andhra Pradesh. According to the state government order, 6,000 acres have been allocated for the refinery and petrochemicals complex, which is expected to have a capacity of up to 240,000 barrels per day and start commercial operations by January 2029. We're looking at the shares now. They are up almost 1%. Okay, Chevron's India arm has unveiled a new 312,000 square foot engineering and innovation excellence centre in Bengaluru. It marks a major expansion of its India operations. The facility, known as Engine, aims to consolidate Chevron's technical work and strengthen its digital and AI capabilities. The firm also recently announcing plans to trim 15 to 20% of its global workforce. The new centre highlights a shift towards leveraging India's deep STEM and IT talent base for high-skill engineering and digital work. And for your Friday finisher, the NBA is back in China for the first time in nearly 6 years. CNBC's Emily Tan has a courtside seat and spoke to major players in Macau about what it means for the city.
Well, for me, that actually NBA never left. NBA continually being live in China on Tencent, Migu, those are broadcasting platform, and benefit millions of fans, and then a lot of young generation of athletes or fans, and very well know the young stars in the NBA, and I know the change of the NBA. So I think the NBA never left.
I think it's great for Macau because it highlights really how great of an entertainment city Macau truly is. The investments that's gone on for the last decade, there's been tens of billions of dollars that have been spent here in world-class hospitality product over the last 20 years. We've been operating here for 21 years, and we've invested $17 billion. So the amount of entertainment capacity here is really tremendous.
As a Macau local, I can tell you the city is buzzing like nothing before. Everyone has traveled here to catch a glimpse of the players, catch a glimpse of the legends, and I think everybody just can't wait for the games to actually take place already.
That's it for now. Stay with us on CNBC.